Why do some people lose everything and exit the market, while others in the same market continue to make consistent profits? The money in the market doesn't disappear, it simply flows from one
I'll
group of
take
people
that.
to another. If you're also preparing to enter the market, you must watch this video to understand exactly what the profitable traders are doing right. Here are the 7 essential truths you need to know to profit from the market. First, trading has methods. You can choose a simple and easy to learn pattern indicator, such as head and shoulders top, ascending triangle, or Fibonacci, that you are familiar with. The key is not which one is the best, but to select one, learn it, and truly understand it. This can indeed help you improve your win rate in determining the direction of the market. This method is very simple. Many top traders have also completed outstanding trades relying on a single pattern. Ordinary people can usually learn it in 2 to 3 months. You can use online resources or seek support from your client manager, or directly use the AI pattern and trend indicator trading provided by the platform. No one can be right every time, but you can improve your judgment success rate through pattern indicators, technical analysis, and even AI tools. You must understand that all methods are essentially about increasing the probability of correct judgment. A single loss is part of trading. Many people mistakenly think trading is a game of predicting price rises and falls, but true experts all know trading is a probability game. It's a math problem. The market only has 2 directions. Even if you guess blindly, you still have a 50% win rate. So why do only a few people make money? Because the experts have grasped the core. They never pursue being right every time, but instead pursue earning enough when right and losing less when wrong. Suppose you earn 100 points when correct and lose only 20 points when wrong. Even with a 30% win rate, you can still be profitable in the long run. It's very likely that the gap between you and top traders in judging direction is less than 5%. The real gap is, you don't T-stop in time when you re-wrong. As long as you control each loss to 1/2 or 1/3 of your profit, even with a low win rate, you can achieve long-term profitability. Therefore, the key to trading is not how many times you are right, but how much you earn when right and how much you lose when wrong. Third, say goodbye to the anxiety of staring at the screen and use stop loss and take profit to free your trading. You don't need to stare at the screen all the time. What you need to do is firmly fasten a seatbelt to every trade, strictly set a stop loss. This is your most solid lifesaver. Market uncertainty is like hidden whirlpools. Even the most experienced traders cannot guarantee every judgment is accurate. When the market moves against your expectation, the stop loss acts like a solid firewall, cutting off losses in time and preventing small mistakes from turning into huge losses. At the same time, set your take profit price in advance based on your preset risk-reward ratio. When the price rises and hits your set take profit level, the system will automatically close the position, securing your real profits. You don't need to stare at the screen constantly, nor worry about missing the best exit time. You can peacefully handle other matters in life and work, so trading is no longer a burden, and you can truly achieve relaxed trading. Fourth, skillfully use the pending order function and wait for your trading opportunity. Many investors have had this trouble. They clearly saw the big trend, but got stopped out as soon as they entered. After repeating this several times, not only does the capital shrink, but confidence is also severely damaged. In fact, the problem often lies in the entry position. Many people see market fluctuations and impatiently place orders immediately without considering whether the current price is appropriate. To avoid this trap, the pending order function is your secret weapon. Before placing an order, calm down first, use the pattern analysis skills you've learned, or follow strategy signals to carefully analyze the market trend and find the ideal entry price. Then, use the pending order function to set your desired entry price along with stop loss and take profit. When the price reaches your preset entry level, the system will automatically execute the trade, helping you enter precisely. We don't need to trade all the time. Learn to wait and be patient so you can strike at the right moment and hit the target in one shot. Fifth, strictly control your position size. When you first start trading, don't go all in. After mastering the methods, then look for opportunities to make big money. Don't put all your money on one trade. Like an excellent investor, divide your capital into 20 parts and invest only one part each time. Even if you are wrong 10 times, you still have 10 chances to recover. In a probability game, you must survive long enough for probability to be on your side, instead of starting to doubt after the 3rd losing trade and giving up before the 5th. If your capital is only enough for 1 or 2 trades, the result is almost pure luck. But if you divide your capital into 10 or 20 parts, even if the first few judgments are wrong, you still have the chance to wait for the subsequent market moves. Trading is not gambling, but a long-term battle that requires precise calculation and long-term planning. Strictly following position discipline is the strongest insurance for your trading, allowing you to always maintain the initiative in the market, S-waves, and move towards stable profits step by step. 6. Pay attention to financial information. Market fluctuations may seem chaotic, but they are mostly driven by macroeconomic policy adjustments and sudden news events. Central bank interest rate tweaks, new industry regulations, international geopolitical conflicts, etc. can all trigger chain reactions in commodities, forex, and stock markets in an instant. Daily attention to financial news is by no means useless. Spending 10 minutes browsing authoritative financial media and reading articles in the app to interpret policy directions and analyze the logic behind the data. This time will quietly transform into confidence for your investment decisions. While others are still chasing hype, you can use your sharp insight into information to position in potential products in advance. With long-term persistence, your market judgment ability will improve subtly. Seventh, continuous review is the core of quickly mastering trading methods. After each trade, you should review it promptly. Check whether the entry logic was rigorous, whether the stop loss and take profit settings were reasonable, and whether there were deviations between market movements and your predictions. Through repeated simulation, you can accurately identify flaws in your operations, such as being trapped due to impulsive chasing of highs or missing profit opportunities due to excessive conservatism. The review process is also the process of building your own trading system. Refine successful experiences into replicable strategies and turn failure lessons into principles for risk avoidance. With long-term persistence, you will develop a deeper understanding of market patterns and evolve from relying on intuition to becoming a professional trader who relies on a trading system. Finally, remember the sentence: trading is not a prediction game, but a probability and survival game. Direction judgment is only the entry ticket. Position size determines whether you can stay at the table and whether you deserve long-term profits. In a system with close to 50% win rate, consecutive losses are not accidents, but mathematical inevitabilities. The market rewards those who adhere to trading rules for the long term. Stay disciplined when in profit and stay rational when in loss. The real gap is not at the technical level, but whether we can still follow the rules when emotions fluctuate. The market will always have opportunities. Only by staying in the market in the right way can you wait for the wave that belongs to you.